Budget Intelligence Dashboard, I want to show you the speech thrust analysis of Finance Minister Nirmala Sitharaman's latest budget. We'll be able to compare what is it that she spent most of her time on. So she spoke of infrastructure and housing 27 times in this budget, tax being critical, speaking of the different dimensions of taxation 46 times. She spoke of digital and online 28 times. She spoke of states 20 times, and that's interesting, suggesting the extra emphasis on the federal nature of economic administration. She spoke on education 19 times, she spoke on investment 18 times, and farmers 16 times. If I were to compare this with the budget that she gave last year, there the focus was more on infrastructure, transport. At that time, of course, there was Corona, and Atmanirbhar Bharat was important as well. So this is a quick word cloud of Finance Minister Nirmala Sitharaman's budget. I want to look at how the stock markets are doing. If you look at the intraday BSE and Nifty numbers, during the budget, there was a bit of a dip, but at this time, the Sensex up 1.5% at 58,882. Udayan, your sense of both the Nifty and the BSE Sensex being in the green, and seem to have welcomed the fact that there were no nasty bouncers on the Sitharaman budget pitch.
You know, the thing which the stock market wanted most was done many months ago when the corporate tax was reduced to 25%. That created the platform potentially of a new earnings cycle, which we seem to be in the midst of, and that's what the stock market liked most. So as I said at the start, if we didn't have a budget today, the stock market would probably have gone up because it was fearing that something negative might come, like a long-term capital gains tax going up to 15%. There was no mention of it. So no news was always going to be good news for the stock market because it is anyways in a good place. The only thing which can roil it is not government policy now, but global volatility because of rising interest rates. So I'm not surprised to see the stock market up today. It likes the fact that the government has chosen to spend on capex and infrastructure rather than on NREGA and such welfare schemes, because that's not what the stock market's focus is. The stock market wants jobs to be created, wants the government to induce or accelerate the private capex cycle, and to that extent this extra capital expenditure spent by the government is very welcome, and that's why the stock market is going up today.
Show you on the intelligence dashboard what the government is hoping it will raise through disinvestment in this year, which is just 65,000 crore rupees. So if you look at disinvestment targets that have been set, Saurav Majumdar, in previous years, you've had targets as ambitious as 2.10 lakh crore rupees. Last year was 1.75 lakh crore rupees. Only 7% of that realized so far. Last year, the government was able to realize only 16% of its very ambitious target. This time, they've scaled it down substantially to about 65,000 crore rupees. The last time it was that low, the target was in FY16 and 17. So they're back to 16, 17 numbers. What would this suggest? Is it just better to be conservative and over-deliver, or is this essentially, you believe, what the government thinks it can realistically achieve this year?
In fact, Rahul, it's interesting that in the word cloud which you read out, disinvestment hardly finds a mention, if at all. I'm not very sure does it find mention at all or not. And so therefore in the speech, after the speech, we had to actually hunt for what was the target for the next year. That itself suggests, the fact that disinvestment is being underplayed at this point. She did mention the LIC IPO as one of the, events which is going to happen. But yes, it's 65,000 crore vis-a-vis 1.75 lakh crore, and and therefore I think definitely they want to look at being more conservative on the announcement of disinvestment. Also remember that they do have some fiscal headroom in terms of taxes, etc. So I think, but even then, I think the point is that 65,000 crore is definitely much more conservative, and I would think it's okay. I mean, if you have a 65,000 crore target and you overshoot it by actually doing an aggressive asset monetization or disinvestment / privatization through the year, you actually might end up surprising people on the upside. So I don't think that's a problem in terms of having a lower target, but it's the implementation which is going to hold the key.
But
and
the
therefore, I
target is
think
down to
the
a
budget
third.
is okay in terms of the
Let's listen to Subhash Garg on this. The target on disinvestment, Dr. Garg, is down to a third of the target last year. And given on the back of Air India's successful privatization, you would have assumed that the government really now wants to up the ante on disinvestment. Suddenly, at least as far as target setting is concerned, they seem to have gone easy. What would that suggest to you? Are they being conservative, hoping to over-deliver, or is this what they think is actually going to happen and therefore no point making any great noises?
I think it suggests two things. One, that let us be realistic. What we can't do, we should not over-project and promise. That is what leads to the downward revision in the receipts for this year as well as for the next year. The second one, which perhaps would be very bad for the economy, if the government is losing the enthusiasm for privatization and disinvestment, and that reflects in the downward revision of the targets. I think that would be very, very...
Siddharth Zarabi, which one do you think it's more likely? Because the expected value or the range for the disinvestment of BPCL is in the range of about 85,000 crore rupees. Given that the overall target is only 65,000 crore rupees, does that mean A, BPCL could potentially be off the list for this year? B, is the government being conservative? C, are they just being realistic?
I think it is...
or as Dr. Garg says, they've possibly lost their mojo and their enthusiasm.
I don't think that is the case. I think they've realized that giving out a big number holds the entire finance ministry brass to that, and it's a conscious decision to not overcome it. Now look at the tax revenue numbers. No one knew that there would be such a spectacular growth in a second COVID year. That surprised on the upside. I think some expectations are being reset at a lower baseline so that when you achieve them, you certainly have something to crow about. Now, obviously, LIC, there are, and I'm sure this point has been discussed, there are 60 days to complete it. The man who is leading the company has gotten yet another extension. 60 days time period may or may not be enough for SEBI approval. There might be cabinet approval soon. The realization of the dues will happen next year. Once that comes in, it sends out a positive signal. It changes the fiscal deficit number. I'm going to say this with great respect and caution that I would repeat that these numbers are subject to change. And the Modi government is telling us that for a central budget which does not account for all of India's national income, there is room to keep doing mini budgets outside the main budget. So I don't think we need to sweat beyond a point on the numbers, but it is definitely a clear pointer of fiscal I hate to use the word contraction, but there is some amount of moderation, and the capital expenditure number is not going to be spent this year. That is impossible. So that will also lead to a saving. All in all, by the second half of the year, when growth is expected to dip, the government could come out and say in its mid-year review, we are doing far better than projected, and send a positive signal, Rahul.
But are we also then possibly seeing a new paradigm then in how the government is doing these projections? For example, yesterday, the GDP growth number projection was between 8 and 8.5%. The IMF's projection was 9%. So we're being more conservative, A, than the IMF. B, on disinvestment, the target only set at 65,000 crore rupees. Is there a sense that the government just wants to be conservative rather than talking up what it will do and under-delivering, talk less and do more?
There could be many other nuances, Rahul, to this. One, of course, is a general understanding or acceptance in the government that 2022 may not be the kind of year for financial markets as 2021 was. And, you know, divestments don't happen in a vacuum. They happen basically in the bedrock of financial markets, and market conditions allow you to do certain things and don't allow you to do certain things. So they may be saying that, you know, look at how the year has begun, look at what the US Fed is doing, because we are having a once in a decade kind of situation where global interest rates are rising and global liquidity stimulus is ebbing away. And in the midst of that, if you say, whatever happens to the world, I'm going to push through 2 lakh crores of disinvestment, that won't happen. So one could be a realization and an understanding that financial markets will not allow you that kind of elbow room this year, and therefore an aggressive budget, there is just no point in putting out such an aggressive number. B, my feeling is that the government has faced a lot of pushback, because I think that they made a serious attempt last year to push through the 2 public sector banks which were announced in the previous budget, and I don't think they made much headway. I mean, there are many interested factions in these public sector unions also. So I think the pushback from some of these elements has also made the market or the government quite skittish about what it can do and what it cannot achieve. So I think having tested all of that, they've made a reasonable estimate that maybe things which can be pushed through this year are the likes of BEML, the likes of Shipping Corporation of India, the ones where probably there's not such a big issue with unions. But the banks will be difficult. BPCL, maybe there's a valuation issue and not too many buyers from the oil space globally, and that might be getting stuck there. So I think you have to see it through a slightly nuanced prism, but I think it's part pushback, part global market conditions, which are also coming in the way of this kind of a poor divestment target. By the way, as I said earlier, on asset monetization plan, there was not much at all in this budget. So that is another, which is quite separate from disinvestment. So I don't know where we are going to find the money for this national infrastructure pipeline that we are talking about. Without this kind of capital receipts, I think the government will probably struggle next year as well with its fiscal deficit target. It could.
Udyan, just to add on the point of Bharat Petroleum, Business Today had just reported this story. There seems to be a clear realization with the government that the macro global environment for carbon is no longer conducive. The second bit is there is significant disappointment with the 2 bids that have come in. There will be, and I repeat, there will be a fresh effort that will be made for this company. The government had hoped that between 2 large private industrial groups, one of them would come forward. That hasn't happened, but I would not discount the possibility of a Air India-like situation emerging later on. Remember, the Air India effort also predates to almost 4 years back. It sort of came out all of a sudden, which is the Modi style, but BPCL could surprise us.
There's a larger global mega trend against fossil fuels and companies that are powered.
But Rahul, not to counter your point, but in terms of the size of the Indian market, a retail presence that BPCL enjoys is not going to vanish away overnight. It still is a 2-3 decade play in terms of the retail presence, the locations, the ability to
when it
reach
comes
other...
to the enterprise value that can be generated from that kind of a transaction.
That's absolutely
given
right.
how RIL struggled with Aramco, there will be problems, and therefore, Subhash Garg, we possibly lost the golden opportunity.
Yes.
When that opportunity existed, the government not pushing through really means that even if it does happen, like Air India, after much delay, it will be at a much lower enterprise value than what we could have realized earlier.
You see, if you want to discuss the BPCL, the biggest issue in the BPCL divestment, besides the global headwind and the carbon lack of interest in carbon, is the inability of the government to free the oil prices. For last 70 odd days, there's been no increase in the oil prices. And no one will perhaps buy BPCL in a situation where they don't have the pricing freedom and they can't realize. So these are the kind of reforms and the policy issues which, unless settled, and as Udyan said rightly, in the case of the banks, it is pushback from the unions, and therefore the disinvestment targets of 65,000 crores, in the absence of banks being done, BPCL being done, might actually be over-ambitious for the next year, rather than underestimate. By the way, Udyan, now we have the capex numbers available. If you want to discuss that, those numbers are giving a very interesting situation.
Go on, sir, let's do that.
Yes,
go ahead, Mr. Garg.
And these are right there in the statement number 1 of the expenditure profile. If I can point out, the budgeted expenditure for 21-22 And we have two kinds of a capex taking place. One is from the government and the other one is from the public sector. And this statement gives you the picture for both the capex together, the central government as well as the public sector. So the budget estimate for 21-22 for the capex expenditure was 11.37 lakh crore. 11.37 lakh crores. Now in the RE, this has gone down to 11.05 lakh crores, despite 60,000 crores of the capex expenditure in the loans to that company for taking over the the Air India loans is down by about 32,000 crores in the RE as compared to the B. Now look at the budget estimates for the 20-23. The budget estimates for 22-23 are higher at 12.19 lakh crore. But this 12.19 lakh crore includes 1 lakh crore of additional loans to the states. If you take that 1 lakh crore loans out, then the net capex is only 11.19 crore, which is less than the B of the current year by about 20,000 crores. And this is reflected very sort of tellingly in the resources of the public sector enterprises used for the capex. That is a story where from the B of 5.82 lakh crore for the 21-22, in the RE it goes down to 5.02 lakh crores. And the budgeted expenditure for the next year, it goes down further to 4.69 lakh crore. Now this is on the public sector expenditure, the NTPCs and the power grids and the Indian oils of the world, their capex expenditure has been reduced from this year's B to the next year B by 1,13,000 crore. And now here,
Mr. Garg, just for the benefit of our viewers, what does this all sum up to? Has the tap been shut off, or is it only half shut? I mean, I think we need to contextualize this, because the more we go into this, and I agree with you, there is significant expenditure compression. Yet you see the top line number, which is at 39.44 versus actuals of 37.44. Explain that to us, because you have made these numbers for many years yourself.
So two messages are very clear. Number one, capex, real capex of the central government and its public sector enterprises are not going up at all. So this 2 lakh crore kind of thing that capex has been increased is not on the whole true. So this 2 lakh crore of increase which you are citing from RE to B, 1 lakh crore is explained by the higher transfers to the states. And the other ones are explained by the type of the items like interest expenditure, which has gone up by about 1.4 lakh crores. So there is no real increase in the revenue expenditure, and there is no real increase in the capital expenditure.
You know, which is why it's so important to have a former finance secretary with you on the budget panel, because you're able to distill numbers, just see through all the narratives that are being spun and cut to the chase and bring out what the actual picture is, and suggesting that the 2 lakh crore rupee increase in capital expenditure isn't quite what it is being made out to be. Dr. Shamika Ravi, we were having this conversation on disinvestment and the target being curtailed from about 1.75 lakh crore rupee last year to 65,000 crore rupees. A very deep cut in the government's hope. Ultimately, what gets realized is a different matter. But even the pace that they are setting, or the hope that they have in where they hope to end up at the end of the year.
I think they are being realistic, Rahul. I think given last year's very optimistic, the strategy that was laid out, and eventually, I think it's very important for us to realize that beyond the politics of it, and this is a point I keep reiterating, it's not very easy to privatize in India. I mean, you are still seeing the kind of judicial entanglement that some of the decisions taken in the Vajpayee era still tend to linger. So, we want these to happen, but it really is a very complex task. And I think this year, rather than last year, this year, they're just being more realistic. But, I keep going back to Udayan's larger concern, which is that, the RevX has been reduced. And that's because, and of course, NREGA, we are all thinking of social protection from the NREGA's point of view. And I think it's important to note that social protection has to be thought a little more broadly. I do think, and as I've been reiterating on your own channel, jobs are the leading concern of the present day today for India. And yet social protection is not just NREGA. I think PM Awas Yojana has been, the outlay has been more than double. In fact, it has nearly been tripled. So we know that the strategy of government protection and the kind of social protection that they're going to roll out, at least the next 1 year, is going to be away from some of these schemes towards more infrastructure development in the form of housing and tap water and so on and so forth. So you're seeing that shifting away from some of these RevX schemes towards more which are asset building for the poor households. So that's another thing to be sensitive to.
Udayan?
Yeah. No, Rahul, I heard Mr. Garg explaining the capex bit, and I am frankly quite worried about whether we are going to get this capex boost on which I think the report card of this budget will be formed. So if that is not the case, as it seems quite likely, then I think we'll have to reassess whether it has indeed been such a growth-oriented budget. On the other point about the loans to the states, I think it's also we should also bear in mind that the states actually have a lot of cash on their hands in any case, unutilized cash this year, and therefore to expect them to take up this 1 lakh crores of interest-free loans from the center to spend immediately towards capex might be a bit of a stretch. So I think the most attractive part of this 2 lakh crores also might not be implemented immediately, not leading to the kind of capex boost or infrastructure boost that we are all hoping to see over the next few months. So it is a bit of a problematic area.
Okay, what we're going to do right now is slip into a quick break. When we come back, we'll have Abha Bakaya join us. Udayan and Siddharth will take you through how the markets are faring at this time. We'll look at different sectors. We'll also look at how different companies are performing. We'll try and get a sense of what the financial markets are making currently of this budget and what might happen in the year to come. Details on the other side. Stay with us. We're back in a moment.
Introduction of a central bank digital currency will give a big boost to digital economy. Digital currency will also lead to a more efficient and cheaper currency management system. It is therefore proposed to introduce digital rupee using blockchain and other technologies to be issued by the Reserve Bank of India starting 2022 and 23. Scheme for taxation of virtual digital assets. There has been a phenomenal increase in transaction in virtual digital assets. The magnitude and frequency of these transactions have made it imperative to provide for a specific tax regime. Accordingly, for the taxation of virtual digital assets, I propose to provide that any income from transfer of any virtual digital asset shall be taxed at the rate of 30%, 30%. No deduction in respect of any expenditure or allowance shall be allowed while computing such income except cost of acquisition. Further, loss from transfer of virtual digital asset cannot be set off against any other income. Further, in order to capture the transaction details, I also propose to provide for TDS on payment made in relation to transfer of virtual digital asset at the rate of 1% of such consideration above a monetary threshold. Gift of virtual digital asset is also proposed to be taxed in the hands of the recipient.
This is a very progressive and a very forward-looking budget. It prepares India for the next stage of its sustained growth. It's a continuation of last year's budget. The last year's budget had a number of positives. It's really in continuity of that. But I think the real highlight of this budget is its huge expansion on capital expenditure, because it takes outlay for capex from 5.54 lakhs to close to 7.5 lakhs, and with the states it's about 10 lakh crores, which is about 4.1% of your total GDP. And this is phenomenal because I'm a long-term believer that the only way the country can grow, way we can lift people above poverty line, the only way we can have investment, savings, all together is through creation of good quality infrastructure. This is what the budget focuses on.
नहीं, मैंने तो ये कहा कि ये गरीबों का बजट नहीं है, अमीरों का बजट है। जैसा कि उन्होंने महाभारत कोट किया, ये एकलव्य की बजट नहीं है, ये सिर्फ द्रोणाचार्य और अर्जुन की बजट है। किसानों की आमदनी 2 गुना करने की बात कर रहे हैं वो